Good afternoon, Scott Latif Live. Welcome to today's recap. So it's Wednesday, the Fed is behind us. Big Ben decided to taper, but also stay the course. Left a message that we're in the process now of reducing some of the pace of purchase. Obviously, that doesn't happen tomorrow. Market liked that that's getting that on track, and you had to react very fast. Listen, there are a lot of different ways you could have approached today. In the morning call, we tried to give you some type of game plan, mapping out levels, support one, support two. If this happens, do that. If that happens, do that. Said if they get the taper, which would be a little surprising. The first move with a knee-jerk move would be lower, and then at some point it could be bought. Yes, did we know it would be bought within 10 minutes or within 5 minutes? You never have to. You just have to have a plan. And one of those plans that everyone loves in our community is the Red Dog Reversal, right? You take out a level, you take away some stops, people press, you turn back up, change gears. So with that being said, most sectors did that. Traded below the prior, weekly low and then reversed with a vengeance. So if you were short, you had probably 3-4 spots to say, you know what, let me get out of the way. Unless you're that same stubborn bear that's been shorting this market all year long, but you probably are not a member of the site because lots of people aren't doing that. They've been trying to ride these trends. Or if you were like me, okay, I came in flat to the what's it called, the situation, the Fed speak and then the conference, because I didn't know what was going to happen. I was going to react. I was going to use my instincts. First instinct earlier in the day was to get out of some longs as it felt like things were a little weak, that they wanted to do some kind of flush, not knowing where they would go. Then, once we started turning the corner, and once we saw some strength in the banks, and once we saw the home builders and the bios and everything start going, you had more than enough opportunity, even if you were flat, because you wanted to have risk down, to put on multiple positions. And this is a time when, I'm sorry, I know some of you just follow me on Twitter, you don't follow the VTF. If you were on the VTF, you would have seen the positions start to get put on. From Goldman Sachs around 172 to Bank of America around 1530 to then some GE and then some bios and then some of the FXI. Like, you would have seen it develop. And that's what the VTF is for, to see trades happen real time, not just time stamped. Paper trades, these are trades that either make me or lose me money that I do to make a living. So with all that being said, take a look at the chart here. You take a look at the S&P, and you will see that here is that trend line that's been intact for the majority of the year. Here is the most recent action area. Take a look here. Let's take a close-up look. Let's look what happened here. What did we do when they came out and said they're going to reduce the pace of purchase? I even got short, made a little money short, and then I covered when we reclaimed this zone, when we reclaimed 1772. What did we do? We held the 50, and then I covered right around here, and then once we started to take out this is when I started putting on my longs. That's when I started to, say, you know what, let me go with some Goldman, let me go with some Bank of America, whatever, let this develop. And again, then you had to measure the commitment along the way, which it wound up staying. So with that being said, if you didn't cover your short here, hopefully you covered your short there, even if you didn't want to get long. And now look where we closed. We closed right back to the prior high. Best case scenario would be, I'd hate to just blast through, tomorrow or Friday, but who knows what's going to happen here. I'd love to see some commitment in the top third of this area. And then if you see some sideways movement, then perhaps you get some individual stock plays. Kind of like what happened here. Remember when it looked as if we were going to fail, came back up to the highs, wasn't ready, held it higher, and then busted to new highs? Let's see what happens here. But all in all, the Fed's out of the way. We'll see what goes on. The banks did act best. You look at the XLF, wow, what an engulfing bar. Traded through the prior low, didn't even hit the 50-day, blasted off right back to the highs. If you didn't buy it on the Red Dog Reversal here, you could have bought it when it took out the resistance, just like that past chart. Goldman Sachs, I tweeted about it last night. I talked about it this morning. We focused it on the morning call. Said this bank is the closest to the highs. Spent 2 days above 170. I came in long. I actually got stopped out pre-Fed. Came back, saw it up around 171, 172, said, you know what, it's holding in there, went back and held for the majority of the afternoon, and I still have some. Very clean move, first time above this level in like 5 months. You would think, it could head higher. And then the other stock we talked about in the morning call was Bank of America. Said, we need an igniting bar. Remember this monotonous little trend line or this monotonous trend to the downside? Here, Okay, and then finally it woke up. You saw commitment and then that run to highs. Well, it's slowly pulled back, held at 21-day, reversed. I even got stopped out. Guys, I got stopped out of my Bank of America at 15.13 when I went to the gym. Came back. You know what? I didn't say, oh, I sold 15.13. I can't get back involved now. I said the trade just changed. We just went to 15.30. You know what? I could buy it here, and I think it goes. And what did it do? Traded another 2.5%, 3% higher, and I'm still long that. I'm going to stay with it because I think now at some point, you know, it takes out that $16 that it couldn't do last time because look where it came from. This time you have a higher low, you know, maybe a stronger platform. Now, I would say if this is any good, you know, it holds this downtrend. You know, it could just go right through, who knows? But I would say let's hold at least 1550-ish in order to show some more commitment. And I'm not going to show you all the other banks, but, you know, you look at JP Morgan, you look at Citigroup, if you come back to me, you know, all of them kind of reversed and they acted well. You know, a different type of trade has been the bios. Everyone's been trying to find where could the low in the bios be. And finally, if you look at the IBB, you know, it had a red dog reversal, not even a red dog, just held support, closed pretty strong. Looks as if, you know, this could be back in play now, a potential day one back to the highs. You look at some stocks that have been slowly dripping in, people looking for opportunity, and they finally went. You have your REGN that, you know, you want to talk about a day one. Here's a day one. You know, day one where you had a grinding lower trend, made a new low, came above it, red dog reversal, closing the highs. This should lead to some higher prices. You look at BIIB. It too, look at that, right into the gap. That's where it held. Couldn't make a new low, but turned higher. Nice potent engulfing bar. Maybe you need some time to, to break through this, or maybe it just goes. But just saying, lots of people are like, what's going on? High beta is still not acting so great, but money went to, you know, some of the bios. And if you look at the home builders also, you know, they were strong early, and they seem as if they're back in the game. It basically came above this little wedge, closed strong, and at some point it seems like they could take out the highs there. You know, high beta was definitely it was a tough morning because, you know, LinkedIn, which closed on the lows yesterday, so I'm not going to say anything, but that didn't show you any signs that it was a long unless you tried to just buy a dip and slowly work into it. And it was just unfortunate the way it happened, the way it just opened a lot lower and then, you know, probably threw some off their game where they weren't able to take advantage of the rally a little bit later. But anyway, you know, you look at LinkedIn that, you know, was trickling lower just to show, you know, here, look, you know, it came up, made just say like a lower high here, or when it failed to hold. But look how it closed yesterday. Yesterday, it closed on the dead lows with the moving averages curling down. What gave you a sign to be long it? Yeah, maybe a little feeler, and even a little feeler in this, you know, would have hurt. But then came to the 200-day, came off it. So I guess see what happens tomorrow. If it could, you know, trade above today's high and then fill this gap, that could take place for another trade. You revisit it then. You know, with that weakness, some weakness went into Yelp because it's also, you know, somewhat of a high beta social networking name, and it actually held in here, you know, pretty decently. Probably needs some time. Facebook is just an animal. You know, Facebook looked like it went lower in the morning, came back, closed above the highs, continuing. Look what this stock's done since the red dog reversal right here. You know, came below 4404, came back above, then broke this downtrend. And I keep isolating it because I want you to recognize these patterns because they happen again. Then you saw some commitment as it held higher, then gave you another trade here, and then whoopity-doo, look at that. Twitter, still building. Gave you some 2A action today, still trying to hold this, you know, the 8-day as it's been playing some catch-up. Here was that red dog reversal. I took a nice day-and-a-half trade. Some stayed with it. Hopefully, you know, maybe you covered a little bit. It's still holding higher. Look at the size of the move. Lots of different buy areas along the way here. So we'll see, you know, what goes on there moving forward. Needs some digestion, I think. In Apple land, I was really not active there, and I apologize. I talked about two areas. I said 546-ish is one area, or the prior high around 538. It held 538.80. If you look now at Apple, if I drew those lines this morning, actually lines were canceled, okay? This was one spot where it went through really early, okay? And then this was your other spot, okay, right there. Okay, look where it came to and it held. I came back from the gym, you know, to get ready for the Fed, and it was already up off those lows, and I concentrated on the banks. Meanwhile, it closed pretty well considering, you know, you now have this, you have this downtrend. You know, this is broken support. Maybe it tries to fill some of this gap tomorrow, and now it needs to, you know, I guess it needs some time. It's still not an A-plus trade. Perhaps with a little bit of time, this could come a little bit lower and then it could go. What looks a little bit better is something like Amazon. Amazon now engulfed this pattern also and closed pretty strong. This next time probably doesn't have a hard time with 400. Netflix also, people are talking about it on the site. Nice, clean resistance area that might give us an opportunity in the next day or so, right around here, still hovering and holding the 8-day trending. Google had a really strong day today. Google engulfed again. This held, it continues to hold this trend. So on the macro level, stayed the course ever since earnings. You had a few different buy areas, if you remember here. Then you had another buy area here, and then you had the pullback. It did look a little wishy-washy today, and then boom, look at that, they closed strong. So this is back in the game now for a move to north of 1100 through year end or first quarter 2013. So lots of things went on. And then, what else resumed? The down moving the metals. Okay, there was a lot of random action there, and you either had to be really micro, or you had to say, I'm going to stick with this trend that the metals are weak and they're going to close lower. And I think RD was on top of this one. And look at the GLDs. GLDs have been trapped in a downtrend for most of 2013. This is your most recent one. This is also another one. And now it closed on the lows into this area. So, the good book does say take it home short. And, if you did, it makes sense. And here's that next low area. Metals, technically have been a great trade for the shorts this year, right? Look what happened when it broke macro support. This is support from multiple months. Okay, first things first is when it broke this wedge pattern, giving you some clues it can go back to the macro support. Then it broke, and then it's been doing nothing but trending lower. So people could say, how could this happen? How could this happen? Technically, it showed you how it was going to happen. Unless you're a bug and opinionated, you saw it technically. And a lot of people are saying, why isn't gold going up? You have the currency war, you have the devaluation this, you have that, whatever. Technically, the downtrend has been real strong and it's been intact. And I still think that if you went out short, granted, it's been a little random and overnight, but I think it's the right thing for you to do. TBTs that showed weakness at first wound up getting a little bit better. I still think that this is something for the draw, something that could make you money in 2014. But as a trade, it's very erratic, it's very random. So, it's not the easiest to actively approach. But overall, nice little area here. I think that at some point, it could be into Christmas or next year, this 82-ish area gets taken out to the upside. So there's more than enough things to do if you're looking for things to do. Today, if you came in flat and you wanted to hear what happened and measure the action after the Fed, you had multiple times to get into longs, even if you just wanted to go with the spiders themselves versus different stocks because you didn't know what was going on. Multiple areas that went, digested. Let's take a quick look at the spiders because I talked about it on the site, with what levels need to hold. So you go to the 5-minute chart. Here is that reversal after the time period. Then you saw a quick move up. What happened here? Bull flag digestion, right? Didn't fall apart, didn't come back down. It wasn't random and erratic. It went up, held, then went again, held, then went again, held, and stair-stepped the entire way up. So it gave you commitment to this the entire way. So if you did miss this reversal here to cover your shorts, hopefully you did it right here. Okay, or worst case scenario, which isn't even the worst case scenario, after the initial move you saw it hover here, you had a chance to cover your shorts at 180.13 if that's the case. So got to learn how to navigate. If you're going to trade big boy stocks or the market short term or on an intermediate level, you got to think quick, you have to have your levels isolated, and you have to know what you're doing. If you're just a macro investor and you've been staying the course and you put money in every month, I think that's been unbelievable for you. Cool. Obviously, you've seen some stock picking. You could be a stock picker, and there are multiple stocks making 2013 highs, all-time highs. If you just sit in them and you want to use a tier system to create cash flow, cool. If you just want to sit with them and let them work out for you, if you're in the right ones, that's cool too. What you got to do, though, is pick a time frame, stick to it, kick your opinions to the curve, and hopefully you're learning, you're getting educated, you're making money, and you go into the holiday season with a smile on your face. Tonight's our Christmas party, so it's going to be a fun night out. I don't know if you'll see me in the morning call. You probably will. My eyes might be a little redder than they are right now. We'll figure it out. But overall, I hope with the market closing the way it did, you have a smile on your face and you're not frustrated. And if you're learning and making progress, that could give you a bit of a smile, even if the dollars haven't come yet. Scott Redler, T3 Live, the recap. Have a great night.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.